Buy low, sell high. How many times have you heard that? Many times it's not so easy to see an opportunity to actually buy low, but there are times when it's obvious. Is one of those times now or coming soon? If so, are you in a position to take advantage of it? History shows that a strong rebound always follows a recession in the economy. It's been said that millionaires are made during a recession. Winston Churchill also said, by failing to plan, you are preparing to fail. So what if we're heading for a recession? So today we'll take a look at the numbers and what the experts say to see if we're heading for a recession in 2023. So sit back, relax, grab a cup of coffee, and watch our video about if we're heading for a recession in 2023 or not, and how you can take advantage of it. So what is a recession? Some economists define a recession as 2 consecutive quarters of declining GDP, or gross domestic product, which is the total output of the U.S. economy for all goods and services produced. The National Bureau of Economic Research defines a recession as a few months of declining GDP, so a recession typically lasts months. If it lasts for years, then it's considered a depression. I don't think we're heading in that direction. So are we heading for a recession in 2023? Let's see. Without going into details about what causes a recession, a quick answer is, it's not a quick answer. But typically, when the economy experiences growth like we've had in the last 2 years, a normal economic cycle involves a decline in the economy, which causes a recession. This article in Santander also says an oversupply of goods and services that aren't consumed causes a recession as well. Uncertainty, meaning not knowing how the economy will react to certain events like a war or pandemic. Speculation also causes a recession, which is when investors speculate how the economy will be on the news about certain economic indicators. Other causes could be a loss of consumer confidence, interest rates, or a stock market crash, among others. Again, it's not a quick answer. We've had record growth in the last 2 years, as I mentioned, and as much as most of us want to keep it going, it's just not how the economy works. The Fed wants a balanced economy, which means the Fed will take action to slow down the economy by increasing the Fed funds rate, which it did 7 times last year. The numbers show that it has taken effect, but not fast enough. The Fed plans to continue to increase the Fed funds rate to keep the economy in check and balance. So expect increases in the Fed funds rate for the first half of the year, if not for most of the year. As a matter of fact, the Fed officials expect to keep the interest rate elevated for some time, meaning more interest rate hikes. The labor market data was also a lot stronger than expected, so the Fed will definitely raise the rates again. However, 2023 is starting off with a bang. The labor market is strong, but many companies are also laying off workers, especially in the tech industry. There is definitely a push and pull going on, and it is making it a head-scratcher for the folks at the Fed Reserve. By raising the rates, they're keeping the stock market from rallying, since a rally in the stock market will make it harder to fight inflation. But the labor market is strong and the stock market had a little rally. The thing is, it takes a while for the economy to respond to what the Fed does. People are still spending money, mostly from the stimulus checks and from refinancing early in 2022. The job market is starting to soften, but it is still tight, and there are more job openings than workers who can fill them. I'm sure that number will change though, as the tech companies are laying off workers, but again, it's still tight. Another lagging indicator is the GDP. The GDP numbers are typically reported after that month or quarter is over, so if we get into a recession, it might have already been underway. The GDP declined for the first 2 quarters of 2022, but had a sharp increase in the 3rd quarter. 4th quarter numbers should be out later this month, and the forecast is that we'll have a slight increase. However, the forecast for 2023 is a decrease every quarter. And Alan Greenspan, former Fed chairman, expects us to have a mild recession. So keep in mind that the numbers and reports that you see are lagging indicators. They're tracked after something has already happened, but they do give us an idea of where we're heading. Per this article in Forbes, the housing market has weakened, the inverted yield curve is deeply inverted, stock and bonds had a poor 2022 due to fear of inflation. Many economic indicators are negative as well. But you can't have a recession without a weak job market, or if you do, it's a mild one. The numbers on the job market show it is still a tight market, as I mentioned above, but it is softening, with Amazon's sales Salesforce and others laying off workers, with more to follow. It is sure to have a negative effect on the job market numbers. If the other indicators stay negative, it is likely that we'll go into a recession. If we do, then be prepared now to take advantage of it. A little disclaimer here, I am a licensed real estate professional, but not a financial advisor. So make sure you talk with your CPA or with your financial advisor to make sure that any of the following will make sense for your particular situation. And also, let me get this out of the way. If you like and appreciate videos like this, which do take a long time to research and put together, it would mean so much to me if you go ahead and hit that like button. And if you haven't already, go ahead and subscribe. But make sure that you click on that bell, because that bell is what gives you a notification each time that we upload a new video. And I know it's silly, it's annoying, but you will be helping this channel so we can make more videos like this, as well as housing market updates. We'll do tours of neighborhoods, and of course do tips and advice for home buyers and home sellers. And with all that said, thank you so much in advance, and let's continue. Before we go over how you can take advantage of a recession, let's take a look at this article and see how Warren Buffett, the Oracle of Omaha, feels about a recession. According to Buffett, the recession is one of the best times to look for investment opportunity. He said, "Bad news is an investor's best friend. It lets you buy a slice of America's future at a marked down price." More millionaires are created during a recession, but to be able to take advantage of the opportunities created during a recession, you have to have cash. So if you're short on cash, do what you can to have more. Save by cutting back on expenses, get a part-time job or a side hustle, sell as many items you no longer need. If you can, downsize and live somewhere less expensive. If you own a home and have an extra room, consider renting out one of the rooms. Pay off as many debts as you can. Once you've paid off those debts, pretend as if you still have them, but send those payments to your savings vehicle. Capiche? The point is to have more money coming in and less money going out, and save as much as you can. This way, you can take advantage of the opportunities created during a recession. Make sure you're financially set and have 6 months worth of emergency funds in savings before you start investing. Once you're ready, then consider doing any of these. People will always need food, medicine, or prescription drugs, medical supplies, and things to take care of their hygiene. People will always buy the essentials. So investing in stocks or mutual funds in these industries will be a great hedge against a recession. There's no guarantee, my crystal ball is still broken, but companies in these industries typically do well during these times. If you are already invested in a mutual fund or stock, take notice of their price. If it's lower, it might be a good time for you to buy more shares. Since a recession brings financial uncertainty, buy an index fund. They're safer than buying individual stocks. Interest rates will be lower, so this is a great time to borrow if you can qualify, borrow to consolidate debts so your overall monthly outgo is less, and stash away the money that you save. If you can, look into buying a home. Interest rates will be lower, and so will the prices of homes. There will be fewer buyers in the market, which means you'll have less competition. So if you are able to qualify for a home, this is a great time to buy. And if you already have a home and can qualify to buy an investment property, this will be a great time to do that. There are many opportunities out there for a savvy individual who knows what to look for. So use the list above as a starting point and look for opportunities during a recession. Just make sure that you're financially set first, and always research any investments before jumping in. So talk to your CPA, financial advisor, or whomever to make sure that you know the risks of the investment before jumping in. You know what they say, if it's too good to be true, most times it's because it is. Recessions are part of our economy and can have a big impact on many people financially. If you know what to do to prepare for an economic downturn and position yourself to take advantage of the economy when the market turns around, then you'll be in a much better position than if you just bury your head in the sand. So study the housing market and the financial markets and keep up with the news so you can prepare to take advantage of the economy, no matter what's going on, if it's going down or not. Remember that buying low and selling high is great financial advice, but do not try to time the market. Just be prepared when there is an opportunity and jump in. And if you want to know what to do to prepare to buy a home in 2023, then watch this video next. With that said, see you around town.